welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching out there. And hundreds of Texas National Guard soldiers have gathered in an army facility outside Chicago as US President Trump's threat to invoke an anti-insurrection law and deploy troops to more US cities intensify the battle over the limits to his authority. And legal experts and lawmakers say the president has repeatedly tested the boundaries of executive power since his return to office and is exploring uncharted legal territory with threats to carry out mass firings due to the federal government shutdown. Major stock indexes fell on Tuesday, with the S&P 500 ending lower after recent record highs, and investors eyeing political upheaval in France and Japan, as well as the US government shutdown, while gold futures hit $4,000 an ounce for the first time. Let's get across the charts now. And speaking of precious metals, Jonathan Tacadena from MPC Markets is here on a day when gold has hit a fresh record high. I do want to start with gold then, because you say it's hard to find gold mining companies that haven't run far, but you found one potentially for us.
Yeah, exactly. So the way I see sort of gold miners is that because the price has risen so much, the easiest place is just buy the best gold miners out there. So obviously all of the big names have all run. And then what's happened is a lot of the second tier have all started running as well, because they all have certain catalysts that make a run. So you're thinking, okay, so if the good names have, the first tier have run, the second tier have run, like what's left? And it's kind of hard because I've got clients going, oh, I've missed that. That was a great call on, say, Greatland, or a great call on some other ones. I'm just like, what's next? I'm just like, well, why didn't you just listen to me the first time? And now you gotta try and have a look. But I have found one, and that's Gorilla Gold Mines. Now, so what happened is Gorilla Gold Mines, I recommended this when it was back, maybe it was around a 50 million market cap. And then what happened is they raised money in March this year at 38 cents, and it rose to about 300 mil market cap. And it's kind of pulled back to about 250. And this is kind of, I've been doing this a while, and for some reason there's sort of limits on market caps on gold miners. So 100 million is the first cap, 300 million is the next cap, and then 500 million goes to $1 billion. So what's happened is that people that have invested it, and it's kind of stuck at that 250 to 300 mil market cap, and you're kind of waiting for the next catalyst to actually make it run. Now the good thing is they've got 4 drill rigs going in Western Australia, tier 1 jurisdiction. What they're saying is that they've got a possible camp scale mineralization. So what that means is that they've got 3 or 4 projects very close to each other, and a large ore body. And the thing is, they're going to upgrade their resource before the end of this year. So I think they were promising it at the end of October. So that could be the next catalyst for, I think, for it to run. And the cap raise was done at 38 cents. It's trading roughly about 43 cents at the moment. So I think there's only maybe 5-10 cents risk here. And the recent high was 60 cents. So that's the target that I have. If it gets to 60, I think it's trading around the 400 mil market cap, and I think it kind of just edges its way up to 500 mil. So that's the gold miner that hasn't run yet. Still a great project, like great management. They've got drill rigs there. They keep finding more gold. So it's not a pump and dump type of stuff.
All right, let's move on to silver. Is the rally here over for potentially silver and some other precious metals?
Okay, so if you want to have a look at the price chart, so it depends on the order that I'll show you, but basically I want to, okay, so great. So this is a silver chart without adjustment for inflation. So if you as a charts guy, you're like, okay, well, there's 3 highs here in 79, in the early 80s, and then here in 2025. And then every time silver gets to $48 to $50, it kind of sells off. But then once you adjust it for inflation, which is the next chart, this is why I think the silver rally isn't over just yet. And this is silver adjusted for inflation. So in 1980, my family migrated to Australia in 79. $50 probably would have bought you a house back then. In 2011, the next peak, $50 would have probably bought you an apartment. And now in 2025, $50 probably doesn't buy you that much of a house anymore.
Maybe a coffee.
Exactly. Maybe a coffee, maybe breakfast. But that's the point I'm trying to make, is that in terms of inflation, silver can still run from here, because back in 1980, $50 was worth $1.99 here. So basically, that's how much money's been printed since that time. Basically, everything's kind of devalued. All the assets have risen, but basically money just doesn't go as far now. So that's why $50 silver here, in traditional terms, might look toppy, but if you adjust for inflation, we could still have a while to go.
All right, so adjusted for inflation, potentially a little bit further. And I guess what happens in your view with gold now it's hit 4,000?
I think there'll be a little bit of profit taking for a little while, because I remembered when I got on here and it was trading just under 2,000, and I just said, I think it runs to 2,700, and people looked at me weird. And then now we're at 4,000. I think what will happen is it'll probably go sideways for a bit, and then because there's just too many people excited about it right now. And usually when the crowd wants to get into a trade, they're kind of late. So we've hit that 4,000. I think it goes sideways for maybe a month or two, and then once we get into that Christmas rally for equities, I think it starts rallying again. But 4,000 is a nice round number. Take some profits here, especially in some of the gold miners. But be ready to jump back in, because I think it does go higher.
All right, Jonathan, we are starting to listen to you a lot because you are often right. Thank you, Jonathan Tacadena from MPC Markets. That does it for this edition of The Trade. Be sure to join us next time.